Well, unfortunately, there's little change in the broader sentiment picture. Pessimism still dominating as at April. The overall sentiment read in the low 80s, telling us that pessimists outnumber optimists by nearly 20%. And it's the same sort of story. Consumers struggling with the cost of living, higher interest rates, higher tax payments coming into that picture. Not overly convinced that inflation's under control, a little bit less concerned that the news around inflation is poor, but still not convinced that the RBA is about to ease policy. There are a few sort of glimmers of hope, I guess, around family finances, particularly with the tax cuts due in a few months. But at the moment, we're still stuck in this pessimism that's lasted for 2 years now. Australians are not alone at the moment. Pessimism's pretty much everywhere you look in terms of the consumer globally. That reflects the common shock from surging inflation and cost of living, plus in most cases sharply higher interest rates. It is a little bit weaker in Australia than elsewhere, and it seems to be lasting longer, this period of pessimism. Our pessimism has consumer sentiment in the low 80s. Comparable like-for-like measures for the US would be in the mid-90s, the UK in the low 90s, and Europe in the high 80s. And they've all shown some improvement over the last 5 or 6 months. There's a few different reasons behind this. So firstly, our inflation seems to be taking longer to subside. We still have a 4 handle on our inflation rate. Hopefully it's about to dip lower. But also there are differences in the way other aspects of policy are bearing down on the consumer. Our mortgages are typically on variable rate terms and get impacted very quickly by interest rate rises. Most other countries, fixed rate mortgages are more common, and that channel is a little bit milder. At the same time, fiscal policy settings are also quite a significant influence. In Australia, we've seen significant fiscal creep that's seen higher tax payments as a significant drag on consumer household incomes. That's in contrast to the US, where fiscal policy is still very stimulatory, very big budget deficits in the US, and where indexed tax brackets mean that they don't have the same fiscal drag in place. Europe, different story again. They had significant fiscal supports when the war broke out between Russia and Ukraine. They had energy price spikes. That's now sort of rolling off. But Australia's sort of fiscal position, I think, or fiscal influence on the consumer is probably a little bit more of a drag than most other countries. I think going forward, what we're seeing from abroad is a little bit comforting in that as inflation comes under control, as the RBA finds some scope to change its messaging, we should see consumer sentiment gain traction. Likewise, as that fiscal side of things shifts, particularly with the tax cuts in July, that also should help nudge sentiment higher. But the starting point is looking like a weaker starting point for now. Yes, so looking at the patterns of sentiment across the different generations, and here we're looking at baby boomers, the Gen X and the millennials most specifically. Contrary to what you might expect, sentiment amongst millennials is actually typically, and still is, higher than across the other groups. We're talking about 20 percentage points higher. Across the baby boomers and Gen X, we've got sentiment reads in the low 70s, but for millennials it's it's in the 90 to 95 range. And that wedge hasn't shifted much over the last year or two. What has changed is the mix of that wedge. So over the longer history of the survey, the main source, about 85% of that variation, comes down to assessments of family finances. So younger generations typically moving into work or in the early stages of their career are seeing more improvement in their finances compared to older generations. That balance has shifted now. The younger generation, so the premium on sentiment, and it's significant. We're talking about 1 percentage point higher confidence for every 2 years that you happen to be younger. So it's a consistent sort of pattern around sentiment. It's not so much now around family finances. The wedge is sort of more around assessments of the economy and assessments of time to buy. And it's really about baby boomers and Generation X becoming more pessimistic about the economy and about assessments of time to buy. The last year, for example, we've had the first time in a long time, I think possibly ever, where baby boomers have been more downbeat on assessments of time to buy than millennials, which is an inversion of the pattern that we typically see historically. So I think this is speaking to some other patterns in here. Obviously we know about the career progression affecting assessments of family finances, perhaps also less financial exposure to interest rates and high cost elements. But around those assessments of the economy and the inflation outlook, it suggests that older Australians are more concerned about the economic outlook and the inflation risks than younger Australians at the moment. So of course that's the broader sentiment picture. And what's a little bit different is the assessments around areas like labour market and housing markets, where millennials have quite different divergent expectations, really reflecting the more difficult position that first home buyers have in the current stretched affordability market. We saw that in our home ownership survey we spoke to last time a few videos ago, where first home buyers are really looking to delay their purchase decisions and pushing out their expected time that they'll be able to purchase. So it's understandable that aspect of the economy is quite different.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published, or reproduced in whole or in part without the prior written permission of Westpac.